Mr. Gautam Baid, CFA, is the managing partner of Stellar Wealth Partners India Fund, a Delaware-based investment partnership which is available to accredited investors in the US. He's also the equity advisor to Complete Circle Stellar Wealth PMS, a portfolio management service which is available to NRIs and Indian citizens. Both funds are modeled after the Buffett partnership fee structure and invest in listed Indian equities with a long-term, fundamental, and value-oriented approach. Previously, Gautam served as portfolio manager at Summit Global Investments, an SEC-registered investment advisor based in Salt Lake City, USA. Before that, he served at the Mumbai, London, and Hong Kong offices of the Citigroup and Deutsche Bank as senior analyst in their investment banking teams. Gautam's views and opinions have been published on various forums in print, digital, and social media. He is the author of the international best-selling book on value investing, The Joys of Compounding, which we have all read, Mr. Baid. In 2018 and 2019, Gautam was profiled in Morningstar's Learn from the Masters series. His latest book is called The Making of a Value Investor. We'd like to welcome you, Gautam, on our forum. Thank you for being here. I'd like to invite Preeti to take over the Q&A to moderate it, please.
Thank you, Nidhi. Thank you so much. Hi, Gautam. A total fan moment for me. Total fan moment. I am in awe of this book. This is truly a very, very eye-opening as well as resonating with whatever is being taught by our sir, whatever we learn at Millennium Mams. This book totally resonates with that and reinforces whatever we get to learn. So thank you so much for writing this book, Gautam. And as friends, we all know Gautam, a CFA, a value investor, a portfolio manager, author, and a lifelong learner, a man wearing many hats. Gautam, you are truly an exemplar of invest in yourself is the best investment that one can do. And in your book, you said Charlie Munger also promotes that one should be a learning machine. And continuing to that, one should sleep every night a little bit wiser than yesterday.
Yes.
So these things sound very flowery, Gautam, but how do we achieve them practically? Could you shed some light?
It's very simple, actually, one day at a time, right? So investing is a field of very highly competitive learning. So if you want to outperform the rest in investing or be it any field whatsoever, you have to outlearn the rest. And Charlie Munger and Warren Buffett have actually outlined the blueprint for all of us, how to become a learning machine that is one day at a time. Just go to bed a bit wiser than what you went the last day. And over time, as your knowledge compounds, you will start noticing patterns. You will start noticing patterns across various disciplines and how you combine those, big level principles, the high level principles from different fields and use them to arrive at a more effective decision. That is the hallmark of a wise person. That is the hallmark of a multidisciplinary thinker. So that's what Munger has basically taught us, and that is basically how you get ahead in life in any field, be it investing, or be it your business, or be it your relationships, be it your health. Every field, this principle of compounding applies. You just have to be directionally correct and then let time do the magic and all the heavy lifting for you. So that's the simple holy grail of success in life. Just be directionally correct. Just stay on the right path for a long period of time and success is inevitable.
Yeah. So we had Mr. William Green of Richer, Wiser, Happier on our forum last year. He was also of the same thing that we should be directionally correct. So a journey of an investor is long. It is long. And we all need to put in lots of effort in all directions to reach to a certain goal and to enjoy this journey. So while I was going through this book, I could feel a strong essence of Gita in your book. Like simplicity is the ultimate sophistication or living according to your inner scoreboard. So Gautam, how have you reconciled this Gita ji in your book, and what other things do you think we should know about as investors?
Well, the Bhagavad Gita is one of the most sacred texts and one of the best texts, which I highly recommend to everyone to read. In fact, if you look behind me on the wall, this quote which you see behind, trust the process, that's basically the epitome of what one of the verses from the Gita, that is the Karma Yoga verse, basically talks about, that focus on the process, not on the outcome. So investing is a probabilistic activity. It's a probabilistic field. And if you look at any super performer in any field which involves probabilistic activity, you'll notice a common thread among all the great achievers. All of them have a relentless focus on the underlying process, because no one can control the outcome. But by focusing our attention on process, we can maximize our chances of a good outcome over time. And that's basically what the Karma Yoga and Gita also talks about. The Gita also talks a lot about detachment,
Yes.
detachment from results. It also basically explains to us that many things in life will be out of our control, and therefore we have to just make peace with it and just put our best foot forward every day and just move on. And that's again one more big learning from the Gita, which it can be applicable to all investors as well. So no, there's this field of philosophy. uh, Within that there's a branch called Stoicism that basically talks about this very fact only, detachment. So it's about detachment from outcomes, but a relentless focus on the underlying process. If you're very focused on the following a sound process in any field of life, then that is the way to go, because over the long run, again, the same principle of being directionally correct comes into play, and then you have time on your side and compounding will work its magic for you.
Fantastic. Sir Dhankar, sir, you also teach us all the same things.
Warren Buffett, Gautam, he doesn't know, but whatever he said, that is from Bhagavad Gita.
Yes, for all us investors, that is the Gita, right? All the Warren Buffett, Berkshire Hathaway annual letters and the original Buffett partnership letters, those are the Bhagavad Gita for us in the world of investing. So all that is to be done in the field of investing is already out there in public domain. It is not the problem of content. It's the desire to learn that is scarce in today's field. So
Exactly.
it's all about, most of us stop learning the moment we graduate out of college, but the real learning, actually, the real driver of success takes place once you are graduated from college. That is when the
Yes,
real actually takes place in one's life.
yes, yes.
Thank you. Thank you, sir. Thank you, Gautam. I would like to invite Meghna Bajoria for her question.
Yes. Your book was really, truly amazing. Have so many questions from there, but one of the most, thing that touched me was this line which you said, where you emphasize that be passionate about the business, but dispassionate about the stock. We find it quite challenging, but can you share an example from your experience where this balance is particularly challenging or insightful?
So see, all Mr. Dhanuka also often talks about this very aspect, that investing is nothing but buying a part ownership in a business. So when you actually think like a business owner, you're not focused on the next quarterly results or what's happening on a day-to-day basis. Instead, you're embarking on a long-term journey with the promoters and the management of the business, and then letting them do all the heavy lifting. And we have to understand that the real world does not operate like an Excel spreadsheet. In the real world, the actual promoters, the actual entrepreneurs have to go through the grind on a daily basis. And we investors, I believe, are unnecessarily overly demanding at times. I think we should be a bit more patient with management teams and let them, basically, once you have developed the trust in the management and that they will do a good job with your capital, then just stay back and let them do all the work. This is exactly what Buffett and Munger have done in Berkshire Hathaway. They basically entrusted their capital to all these smart XM-ready managers, and then their genius was in simply getting out of the way and letting those managers do all the heavy lifting for Berkshire Hathaway. That is the way we have to approach investing when in public markets as well. Just entrust your capital to management whom you can trust, and then let them do all the heavy lifting and just stay out of the way. Often, like Benjamin Graham has taught us, the investor's worst enemy is often himself, because our emotions get the better of us at the worst possible times. At the times of euphoria, we become greedy, and at the time of turbulence in the market, we become fearful. We should be doing the exact opposite, because that is what Warren Buffett has taught us, that be greedy when others are fearful and be fearful when others are greedy. Very simple to say, but not easy to practice, and that's why we have so few people getting rich from the stock market and not everyone.
Very well explained. Thank you.
Fantastic. Sir, we are loaded with questions. People are so eager to ask you questions. Can we have Pooja next?
Hi, good morning, Gautam. Gautam,
Morning.
taking the learning bit forward, the most talented people in any given field are self-educated. As you've mentioned in the book, everything in life can be a teacher when you possess the right mindset. Gautam, can you please elaborate this with your own experience?
This is applicable to every field of life, right? So basically, when in life, I'll tell you this much, Pooja, that there are no mistakes, only lessons. Once you develop this kind of attitude, of looking at every setback as an opportunity to learn from it and grow, then success, is just a matter of time, right? So just, book. I've talked about this in the joys of compounding as well. That it can be books, it can be people you interact with, it can be your personal experiences, it can be
Right.
vicarious learning. It can be vicarious learning from other people as well. So, when you have this constant learning mindset, then every day is a day of growth. And once you become a learning machine like that, and you're approaching every situation with a learning perspective, then your knowledge will compound at a rapid rate and put you way ahead of your peers and contemporaries. I think we often just stop learning. Again, this is a mental
Perfect.
road that we just stop learning from others because we have this ego problem. But the greatest achievers in history, if you notice how they work, they actually like to leverage on the expertise of other people, and actually they're always eager to learn from other people, whether that other person is younger or older than them, or senior or junior than them, does not matter. Because the idea here is to be right. It's not to win any argument. It's the idea is to be right. So that is the approach to follow, basically.
So I've opened all my gates and windows for learning. Thank you.
Thank you, Pooja. Garima from Muzaffarnagar.
Hello, sir. Sir, as Preeti said, a big fan moment for me too. Most simple language you have used in the book for, I think anyone can. My 15-year-old daughter is even able to read it very easily and understand it. Sir, my question is you, in your book, you have emphasized that in investing, patience is not a virtue, it's a superpower. But most of us, like you, we lack the superpower or virtue, whatever you say it. And even sir, our sir has been teaching in yoga. He has a podcast and he's teaching yoga and investing and he's teaching us patience. But still, it's very difficult to implement. So I want your valuable advice in it, sir. How do you apply that?
See, I think one of the things to, if you want to avoid the instant gratification, which is basically job, like we are living in the digital age of, all we want everything instantly, right? Instant coffee, instant noodles, instant gratification. We want everything right now, right this moment. But all the great things in life come from compounding and compound interest. So, how do you develop that delayed gratification gene? Like so Munger has said that if you're not born with it, it's very difficult to develop it. But there are certain small steps which you can actually take. First of all, when you're working on your desk, is put your mobile phone in a different room or switch it off, because the mobile phone, we were supposed to be its masters, but the mobile phone was actually, the smartphones have actually made us their slaves, because we are always constant. The moment we wake up in the morning, for example, we are instantly opening our emails, we are checking our text messages, we are looking at our WhatsApp messages. It is addictive because it is all these actions are giving you dopamine hits. Dopamine is a pleasure chemical in the brain, and it comes from anticipation. So social media giants like Meta, Google, all these people, they've very clearly figured out that human beings are a impatient lot, and that's why they actually take advantage of our impulsive nature. So switch off the mobile phone. I think face-to-face interaction with individuals is very, very important. And the old way of life was much more better. It was we had much more patience 10, 15 years ago. But in the world of social media, it's becoming increasingly difficult. Plus, you have to also understand that social media, Instagram, Facebook is nothing but a curated highlight reel. That's not the real world, actually. Mental health has become a big issue across the world because many people are not understanding this fact that these platforms are just curated, selective highlight reels of people. People, no one is that happy all the time, right? But that's what all that people post on social media. So we have to be aware of the game which is being played here. So just being aware of these biases and these practices at play will greatly help you become more patient and not succumb to instant gratification. Because for people who are not born with a silver spoon, for them, if they want to build something on their own, then you have to be patient. And in fact, this reminds me of a conversation which Jeff Bezos had with Warren Buffett a few years ago. So Jeff Bezos asked Warren Buffett that what you're doing is so simple, but how come no one is doing it, and how come no one is as rich as you? So to that, Warren Buffett replied to Jeff Bezos, the reason is that no one wants to get rich slowly. So
Yes.
it's basically all about getting rich slowly. It's about watching the paint dry or watching the grow. If you want some excitement, go to Las Vegas, as the saying goes, right? So just you have to be patient. Patience with good quality business, having growing earnings is the key to long-term investing success.
True, sir. Thank you so much, sir. Thank you.
Great, great. Nidhi, can we have you?
Hi, Gautam. So you've been in this journey for some time now, and most of us are new investors. So I wanted to your key takeaways from your beginning years as an investor. And like you said, you're learning every day. So what would you do differently now?
I think our individual investing styles are a function of our personal experiences in the market over time. That's a very good question, actually, which you asked, that what would I do differently? So I've actually addressed this question in the second book, The Making of a Value Investor. In the initial years, when I was operating with a smaller amount of capital and with less experience, I used to invest more in statistically cheap securities, cigar butts, because like most investors, had started off by reading Benjamin Graham's The Intelligent Investor, and in that, but we have to understand that that book was written in the aftermath of the Great Depression, when many companies were
Correct.
available less than their working capital. But now, in today's world, if you try to buy a company for less than the working capital, generally that company turns out to be a fraudulent company, or problem is there. So I think the switch from statistical cheapness to quality of the business and quality of the management has been the single biggest change. In the initial years, I also used to invest a lot in deeply cyclical businesses, commodity stocks, micro caps. That is also something which I've stopped doing now, because I've realized over time that for sustainable wealth creation, you have to focus on two things: quality, that is the quality of the business and the management, and prudent diversification. And now this is very important. Prudent diversification basically means that you're having a portfolio of 20 to 25 stocks diversified across industries and risk factors. This
Right.
practice ensures your portfolio against a catastrophic outcome for the portfolio as a whole, and it also opens the door to optionality for you. So I think prudent diversification and focus on quality, these two are the single biggest realizations in my investing journey of the last 17 years. And that is basically how you sustain the wealth made in the Indian stock markets. Because in the Indian stock market, statistical cheapness, that method does not work. It may work for a year or two, but the moment a bear market comes, you'll again lose up all your capital which you have made previously.
Thank you so much. Thank you, Gautam.
Thank you, Nidhi. Rachna Prasad.
Yeah. Hi, Gautam. Gautam, as you spoke about instant gratification, so in 2019, when we attended the AGM of Berkshire Hathaway, there was a 17-year-old girl, and she was talking about delayed gratification, to which Mr. Buffett said that you should not go overboard on delayed gratification, and you should be happier when you have financial security. So,
Absolutely.
do we all have to start early in life, to reap the benefits of delayed gratification, or how is it, your views on it?
The earlier the better, of course, because we all of us know, in the compound interest equation, time is the only element in the exponent. So the earlier you start, the more you can start, the better you can start harnessing the exponential power of compounding. But even see, there are many big entrepreneurs. For example, the founder of Walmart, he founded Walmart at the age of 50, right? So it is never too late. The key to compounding is to begin. So it is never about the first $1,000,000. It's about the first dollar. The key difficulty or the challenge is starting out. It's about the start. So it's all, there's no age which is too late, but the earlier you start, obviously, the better. And in fact, in today's world, in today's digital age, even at a middle age or older age, there are so many opportunities to actually make it very, very big. I mean, look at the founder of Nykaa. Like the founder of Nike actually listed the business when she was in her 50s, right? So, even in your 50s, you can become a multi-billionaire in India today. As long as you operate an ethical business and a business which is very attractive to the end consumer. So it's never too late. But obviously, the earlier you start, the better.
Thank you so much. Thank you for your
Thank you,
views.
Rachna. Thank you, Gautam. Can we have Swati next? Swati Chaudhary.
Good morning, Gautam. Take up one idea, make that one idea your life, think of it, dream of it, live on that idea. This is the way to success by Swami Vivekananda. I love this quote. Gautam, how have you applied this in your life?
Well, Buffett has also talked about this previously. Buffett has said that intensity is the price of excellence. So if you want to excel, if you see our society, in fact, all societies across the world reward, disproportionately reward specialization and excellence. And this quote which you mentioned, that it's all about that specialization and excellence, because that is what society will really greatly reward you for. At the same time, like Mangar has taught us, it's important to have a working knowledge of the big ideas from the different disciplines. That helps. But you go in deep, you go absolutely in depth in one particular field while having a working knowledge of the big ideas from the different disciplines as much as possible. That is the ingredient for long-term success. But yes, this intensity which you talked about, that is
Yes.
this enthusiasm for the mental process of investing, for the intellectual process of investing, is what helps us carry on during the periodic phases of pain and suffering in the market. Because without this inner strength of our passion for investing to carry us during such difficult phases, you won't be able to sustain in this field for long. I mean, investing success is very challenging over a long time period. A bull market year or two in between just fools us into believing otherwise. But the fact is that over the long run, if you look at the track record of most of the great investors, you'll notice that it's very difficult to make a CAGR of more than 15%. I mean, look at Ramdev Agarwal and Warren Buffett. Over the last 30 years, both of them compounded at 16, 17%. But because they had time on their side, they become so wealthy. The same thing with Mr. Ramesh Damani also. He often talks about making 100 crores from 10 lakhs starting capital by compounding at 26%. I understand that for people who are not doing this full time, it is difficult to compound at 26%. But even if you compound at 18%, that is, you double every 4 years, you'll still end up with a very good result over 30, 40 years. And that is the way to approach investing. This is not a 1 or 2 year thing, it's a decadal journey. So you have to approach it with a decadal horizon.
Yeah, so basically, it's like when you choose something, you have to stick to it.
Stick to it through all the ups and downs. See, during the bull market, during good times, it's very easy, right? It's you realize, you only get to realize whether you're truly passionate about a topic or a subject or a field in difficult times.
Okay, thank you.
Thank you, Swati. Shruti Goel next. Shruti? Okay, let's take Shweta Sachdev.
Thank you, Preeti. Hi, Gautam. In one of your recent podcasts, you were speaking about different investment styles. I think you mentioned small versus large caps and quality versus momentum investing. Now, for some investors like us, I mean, how do we gauge which is the right approach for us? I mean, how do we find the path between the two?
This question has also been answered in the second book. So the best investing approach is the one which you can stick with for the longest period of time across market cycles. And it is very personal, very individual specific. If you notice, many investors in the Indian stock market, some have made it big in cyclical stocks, some have made it big in special situation stocks, some have made it big in growth at a reasonable price, some have done well with quality at any price. But once you've understood and identified the approach that works best for your psychology, for your personal temperament, then that is the single best approach you should stick with.
Okay. So it doesn't matter whether it's a large cap or a small cap. I mean,
the joys of compounding I've talked about is right that categorization of stocks into small cap, mid cap, and large cap is overrated. Categorization of businesses into great, good, and gruesome is underrated. It's about not about the market cap. It's about the quality of the business, because many times, even large cap, look at in US, look at, for example, Apple, Meta, Google. Amazon, Nvidia. From large caps, they became mega caps, right? At the same time, there were many macro caps which basically didn't go anywhere. They actually went bust. So size of the market cap is not the determinant. It's the growth and the quality of the earnings, the quality of that growth, which matters the most to the market. That is what drives market cap creation.
Yeah. Thank you. Thank you.
Thank you, Shweta. Shraddha Poddar.
Hi, Preeti. Thank you. Hello, Gautam. While reading your book, the most impactful for me was the importance of ethical living and mindfulness. As Preeti mentioned earlier, we had Mr. William Greens on our forum discussing his book, Richer, Wiser, Happier. I believe these words, richer, wiser, happier, resonate with you a lot. How did you achieve this?
That's a very good question, actually. In fact, one of my investing mentors, Guy Spire, whom you guys had an interaction with recently, he actually taught me through his book that the way to success in life is through authenticity. I think this is the single biggest competitive advantage which you can have in today's world. Just be authentic. And by authentic, what do I mean? It's about being yourself. I think too many times we just have try to have this pretense of this holy virtues or trying to be someone that we are not. The idea is just to be yourself and actually put yourself out there as you are. Then you'll attract like-minded people.
मेरा क्लास चल रहा है अभी हम आपके साथ वापस जाएंगे तब हम देते हैं
Sorry about this. Sorry. Yeah.
That is basically the way you'll become richer, wiser, happier. Just by being authentic. I think that is a single, and this is a way. This is a sustainable way. See, in the Joys of Compounding, I actually talked about this. That shortcuts may give you some, short-term success or short-term gratification, but they are never really, useful in the long run. So, if you're authentic, then you'll be able to sustain it for your entire lifetime, and no one can beat you at being you, like Naval Ravikant has taught us. So, you have your own specific, unique attributes and characteristics, which no one can copy. So I think once you leverage what you have, then you can actually get a big lead over the others. In fact, here I would like to also share with all of you very big learning which I got from Naval Ravikant. Some of you guys must have heard about him as well.
Yes, the almanac of
He talks about three things basically for success in life. Number one, specific knowledge. Okay, so basically deep knowledge in a particular field. Okay. Second thing he talks about is accountability. So basically putting your name on the line. Okay. So basically when people are investing in your business or putting money as your customer, they're betting on you. So you have to put yourself, your name on the line. Okay, that's accountability. The third big thing which Naval talks about is leverage. And within leverage, he talks about three things. He talks about capital, code, and community. So I'll give you my example for how I'm leveraging these three things in leverage. As far as code is concerned, both my books are selling every day online. So basically, code basically means there's something on the internet working for you 24/7, right? So code is working through my book, number one. Number two is capital. I run a hedge fund in America. So basically, I am leveraging other people's money, investors' capital, right? So I'm leveraging capital as well out there. And finally, you have the community aspect. So through my reader community, through the following on Twitter, LinkedIn, etc., I'm also harnessing that community as well. So once you're having these three forms of leverage behind you, and once at the same time when your direction is correct, just imagine over time what's going to happen in your career. It's a matter of time before you achieve very big success. So accountability, specific knowledge, and the three forms of leverage, when you combine all of this together in your career, in your personal life, you're going to be very successful over time.
Beautiful. Thank you so much. Food for thought, Gautam. Thank you.
Thank you, Shraddha. Gautam, now that you have brought this point of leveraging, there is a quote that says there are old investors, there are bold investors, but there are no old bold investors. So can you explain the significance of liquidity as well as the perils of leveraging?
I think that's the most dangerous thing which you can do in the stock market. See, compounding is a long-term game, right? The key is not to get thrown out midway due to reckless decisions, out of which leverage is one. Because leverage is something which can prevent you from playing out your hand. You ideally want to have liquidity with you when opportunities arise in the market. The exact opposite of that is basically going bust because of leverage, which many people did during the 2018 and 2019 bear market in India, which took place. So, when there is so much money to be made by playing center court, by being in the middle of the playing field, why go near the edges in the pursuit of quick money? I think this is one of the mistakes which I did in the initial years. In fact, I remember, around 7, 8 years ago, I actually pledged some of my shares to, buy shares of a very hot stock in the market, and ultimately that, backfired, and I lost a lot of money. But the good thing is I learned from that mistake, and see, all investors make mistakes. Okay, all investors make mistakes, but the great investors repeat the old mistakes less often, or they do not repeat the old mistakes. That is the difference between the average investor and the great investor. The great investor does not repeat the same mistake twice. He keeps learning and improving along the way. So leverage is something which I would greatly advise people against. Also, futures and options, I would again recommend people not to get there. Cryptocurrencies, avoid unless you have very strong risk management or trading expertise. Stay away from it. These things can basically just make you go bust in the market. And in a prosperous and growing country like India, the worst thing you can do to yourself and your financial future is to resort to these short-term tactics and miss the long-term big picture.
Thank you. Thank you so much, Gautam. Can we have Millie Shah? Millie, are you there? Okay, let's go to Nidhi Jhunjhunwala. Rishma?
Good morning, sir. So my question is that your book, really says what our mentor teaches us, that simple is not easy. But I would like to understand more about it from you. Thank you.
Actually, I didn't get the question exactly. What is the question?
So, as an investor, how do we interpret your words? Simple is not easy. I mean, that's my question.
Simple is not easy.
Yeah, it's very, that's a very good statement actually. So, this is actually from Rabindranath Tagore that, he says that it's very, it's very difficult to be simple basically. And see, simplicity is the end result of long, hard work. It is not the starting point, because in the first half of our lives, we are busy adding things, adding assets, adding material possessions, adding more stuff to our lives, adding more things. It's only in the latter half of our lives, when we have gained the wisdom, that we start subtracting every day. So basically, in the initial years, we're adding every day. The latter half, we are actually subtracting every day. So that is basically how you get to simplicity. So simplicity, an extension of simplicity, which I've talked about in the Georgia compounding, is minimalism. And minimalism does not mean becoming a monk or going off to the Himalayas. That's not what minimalism means. Minimalism basically means spending your time and money only on those few things which give you the maximum amount of happiness. So basically, it's about happy spending, happy money, smart spending, and basically that's what minimalism is all about. I think that is one way to live a simple but very happy life. So that's all covered in the joys of compounding in the chapter on simplicity.
Thank you so much.
Rishma Shah from Mumbai.
Hi, Gautam. Good morning. So emotions actually rule us. We've understood that. So tell me one thing, like how do you prioritize understanding human behavior and emotions in your investment strategy? And also, can you share an example of how this understanding has influenced a significant decision you've made?
Oh, it's top priority, because human nature. This is the only. So there are traditionally, there have been three sources of edge for the individual investor. Number one edge was information edge, but with the advent of the internet, the information edge basically went away. The second source of edge traditionally was the analytical edge, but with more and more smart people entering the investing profession, even the analytical edge is fast getting compressed. But the one edge, which is the most durable and sustainable in my view, is the behavioral edge. This is where temperament and understanding of behavioral finance and other people's emotions and psychology is so important, because this is because human nature has never changed in the market through centuries. So I think this is top priority. And in fact, in March 2020, like when there was I'll give you an example here. So in March 2020, when there was so much fear all around and across global markets and among investors that this is the health crisis, we'll all die, and what will happen to the world. Frankly speaking, if that in that situation, investing should be the least of your concerns, or stock prices falling should be the least of your concerns. I simply thought like this: that okay, if this crisis basically, if generally the world does not come to an end, that's what history has taught me. So in that case, we'll end up making a lot of money from this cheap valuation levels. And in case it does turn out to be the end of the world, then we have much more bigger things to worry about. So I think just having this probabilistic mindset and this scenario analysis mindset greatly helps in making rational decisions during times of stress.
Okay. Thank you, sir.
Thank you, Krishma. Can we have Shruti Gadodia?
Good morning, Gautam. And your book is a Pandora of wisdom, and it has a lot of excerpts from many books and personalities, and of course resonates with what our sir says. You've emphasized to focus on singular goals and not to multitask. But as women, we are dabbling multiple roles and often tend to lose focus. Your suggestions for improved focus?
Well, I know this is a very challenging thing because, like Dhankaji also talks about in various interviews, about the multitasking, which, women basically, especially in India, the kind of multitasking which women have to do. They have to take care of the household, the in-laws, the children, the husband, their careers, their friend circle. It's literally superhuman work that you guys are doing. So congratulations for that. But I understand it's difficult to focus in such an environment. But yes, I think what Millennium Mams is trying to do, and what the message and the key focus of your organization, I think is very commendable, because it's actually empowering all the women in India to actually focus on what is most important, in my opinion. I think this idea of empowerment, this idea of financial independence, this idea of self-respect, this idea of gaining control of your life by actually educating yourself on the personal finance and investing topics is a great noble mission which Millennium Mams is carrying on, and I think that is one of the ways which you are actually being able to focus on one of the very important life skills, which is personal finance. So I think just take it one thing at a time. It's not possible to focus on everything at once, because then you'll not get anywhere. But at least for now, at least this one step at a time. Like for example, for empowering yourself by reading these good books and educating yourself on a particular topic. That's actually one of the ways to at least start focusing on an important attribute. But it takes time. I understand it's challenging, but I think if you want to carve out your own identity, carve out your own impression that I have see many times in India what happens is that the woman is basically known by the name of her husband. Her identity is lost. So but I personally believe that if you really want to stand out, then you have to focus, you have to gain control, and you have to gain your identity back. That is what Millennium Mams mission is all about, right? It's about gaining back your identity.
Yes.
So I think focus is going to greatly help you, and I think all of you guys are on the right track by focusing on what is really important. That is your self-respect, because at the end of the day, nothing beats self-esteem and self-respect. That's the most important thing for all human beings, and I think you guys are absolutely on the right path.
That's true, absolutely true, Gautam, because Millennium Mams has been a life-changing journey for me. So that's great, and thank you for your other advice too.
Thank you, Shruti. Thank you so much, Gautam, for those kind words of appreciation for our organization. Thank you so much. Can we have Rashmi Jhavar next?
Good morning, Gautam. Gautam, our mentor, Mr. Dhanuka, says life is a series of opportunity costs. And you've also mentioned the same in your book. And you've also said that if you refuse to accept anything but the best, you very often get it. Sir, can you please elaborate this for us? Thank you.
Right. So it's absolutely correct. Basically, all the great thinkers basically make their decisions in terms of opportunity cost. So, Buffett, for example, if we just talk about Warren Buffett, for example, if he has this investment opportunity, which can give him 10% return, and if another investment opportunity comes by him, which can give him 8% return, then he immediately discards the inferior opportunity. So the idea is to avoid adding anything to your life, your relationships, your circle, or your investment portfolio unless it makes them better. That is the whole idea of opportunity cost. It's all about being very, very, very strict and very disciplined about whom you let into your life, in various aspects of your life. So that is basically about opportunity costs are all about, because life is very short, right? And you don't want to just, and there's a saying that you're the average of the 5 people that you spend the most time with. So be very careful in cultivating your circle. If you associate yourself with pessimistic, despondent people, or people who are always criticizing others instead of working on themselves, then you will drift in that direction. Whereas if you associate yourself with smart, good-natured people, then you will automatically start drifting in the right direction. So, it's very important to cultivate our circle very, very carefully.
So this is the beautiful circle that Dhanuka sir has given us through a family of Millennium Mams. I can thank him forever for life. Thank you, Gautam.
Thank you so much, Rashmi. Can we have Sushila Jain for the next question?
Hello, Gautam. There are many stories that numbers do not reveal. We at Millennium Mams are always taught by Dhanuka sir about the value of good management. Can you give us a guideline for this and share your experience?
Oh, there are so many guidelines which I can share with you right now. So, Buffett and Munger have taught us the principle of inversion. I don't know if you guys know what inversion means. Inversion basically means flipping the problem statement on its head. So, if I want to identify what is a good management, first I will identify what is a bad management. And how do I identify bad management in India? There are thousands of companies with bad management, right? So there is a full checklist of 40 items with me, which I follow at all points of time. I've actually printed it out on my desk and kept it. So some of them include checking for, any significant related party transactions. Has the company shared wealth with minority shareholders in the form of dividends and share buybacks? Does the promoter have a similar business as the listed entity in his privately held company? Because that may lead to a conflict of interest. Is the auditor fees growing faster than revenue growth? Check for that. Check whether there are any significant qualifications for auditors as well. Also check whether, is the company giving a guarantee on the debt of its other group companies to the listed entity. Check for trends in the working capital cycle. Check for the trends in the debt to equity ratio. Check, whether, there's a full list of 40 items basically which I go through. And I think also, for example, check whether the company is blowing minority shareholder money on building lavish corporate offices. How have they treated minority shareholders in the past? Check. That's very, very important, because see, we are outside passive shareholders. In the driving seat are the management, right? So how they treat these shareholders is the ultimate, the most important thing to focus on. So in India, that is why the handful of good quality companies with good corporate governance, they get such high valuations. That is the whole idea.
Thank you so much for it.
Thank you, Sushila. Can we have Shweta Singhal next?
Hi, Gautam. Gautam, in the book, you had admitted that you take 3 times as long as others, everybody else. So I resonate with that. And how did you address that? Could you elaborate on that?
I missed the first part of your question. In the book, what did I mention?
That you take 3 times as long as everybody else.
Oh, yeah.
To understand.
I still do, right? So it's better to be slow rather than wrong, right? So basically, I take my own time and I take time to make my investment decisions, but that's all right. So ultimately, until I've convinced myself that I have the conviction and the belief in the management and the quality of this business and the prospects of the industry, till that time I don't want to move ahead. So it's better to take your time. There is no need to rush. India's growth story is not going anywhere. It's not disappearing overnight. There's a 20-year runway in front of us at the very minimum. So, and there are 6,000 to 7,000 listed stocks in India. So there is no rush. Take your time. But a serious investor never purchases ownership interest in a business without conducting the necessary due diligence. So, always in a bull market, what happens is the speed of research, or the speed that's greatly compressed, and people are just doing Twitter kind of research or Telegram or WhatsApp group kind of research. They're just looking at stock tips or broker reports on Telegram channels and WhatsApp groups and then buying the stock. That is not investing. Investing means actually going into a detailed deep dive into a company by going through the conference calls of the last 5 to 10 years, going through the annual reports of the last 5 to 10 years, going through the latest presentations, press releases, looking at the competitive landscape of the industry the company is operating in, doing a comprehensive corporate governance check on the company, also going through the conference calls of the listed peers of the company. Because, many a times we are only studying the company, but at the same time, also check what the peers and the competitors are saying, because their conference call transcripts are also there. One peculiar problem with many Indian companies is that the managements tend to become overly bullish in good times and overly pessimistic in bad times. So always corroborate and cross-check what they are saying with what their global peers are also saying. So there is a very exhaustive process which you have to follow, and that takes time.
Thank you. Our mentor or make us do that only. Go through every conference call where we are investing. Please guide us that way. Thank you so much.
Thank you so much, Shweta. Prerna, you have a question?
Hi, Gautam.
Hello.
It's so nice to see you after so long. I don't have a question. I just want to share something from your book, where it says that the right book at the right time will speak to you in a way that the right book at the wrong time just won't. So when my mom sent me your book 3 years ago, I was really proud that somebody in our family has finally written a book, but I couldn't understand it. And it's because of you that I joined Millennium Mams. And it's because of Dhanuka sir and Millennium Mams that I can finally understand and appreciate your book. So that's what I wanted to share. It's opened up like a whole new world of learning for me, which is really interesting and exciting. So thank you.
Thank you so
Thank
much
you
for the
so
kind
much. Thank you. Neha Jain.
Hi, Gautam. We are surrounded by so much information that is of immediate interest to us that we feel overwhelmed by the never-ending pressure of trying to keep up with it all. So, how do we filter such information, especially because there is so much of it all around us, and as laymen, we don't understand the authenticity, and it's easier said than done that you should move away from the noise. That's my question.
Again, Buffett has already provided us with the answer to this question. So, in investing, focus on those investments where it is the microeconomics or the specifics of the business that is going to determine the outcome. So, the true investors do not focus on the macro noise all around about the politics and geopolitics. They simply focus on the individual business and the specific industry developments. That is all that we can do as investors, nothing more. So always be humble. Just focus on the microeconomics of the individual situation and about how do we actually minimize the noise. So first of all, be very careful in who you follow on platforms like Twitter or Instagram, for example. So you have to have a very high filter and a very high bar. Like I mentioned in my previous answer, be very careful about who you let into your life. That includes your digital life as well, right? So be very careful of who you're following and only follow those select accounts which are adding a lot of value to you, be it as an investor or as a housewife or as a working professional or as a friend or health matters. In whichever handles are basically adding value to you, you have to basically follow them only and ignore the rest. You have to be a very ruthless in filtering out the non value additive portions of your life. That's basically the way to minimize noise automatically.
Thank you so much.
Thank you, Neha. Can we have Shalini Singhania for her question?
Hi, good morning, Gautam. Gautam, I just read somewhere that widespread fear is your best friend as an investor, but personal fear is your worst enemy. So, Gautam, can you elaborate a little on this, please? Like, there's a by default fear as an investor, and especially if you're a new investor, so there's a by default fear. So, how to overcome this, Gautam? If you could just elaborate.
By investing in yourself and your knowledge. See, knowledge, in my opinion, is the best antidote to fear, because ignorance is what leads to fear and uncertainty. But how do you get that ray of light which basically eliminates that fear and ignorance forever? It's knowledge, right? So it's all about investing in yourself, and that's the best investment you can. As Buffett has taught us, the more you learn, the more you earn, right? So basically, the best investment you can make is in yourself. And it doesn't have to be very complex. Start off with for example, reading the annual reports of very basic companies, like for example an FMCG company like Nestle or Dabur, or or a multiplex like PVR or Inox. Start with the basics And over time, what will happen is you basically keep graduating up the complexity curve by reading about more different varied industries outside your daily circle of competence. And that's basically how you overcome this fear. So there's no better antidote to overcoming fear than by investing in your knowledge. And you guys already have such a strong ecosystem of intelligent people in your in your circles in Millennium Mams. I think you should try to leverage this association and try to gain the maximum you can from your circle and gain as much knowledge as you can, because it's never too late to start. It's all about just that first step, right? So keep learning every day, and over time you'll notice that the fear and that uncertainty will completely go away, and you'll develop a lot of confidence. Because if you get scared away by what this the main job of the media or the business media channels or any general news channel is to spread fear and negative news. Why? There's a business reason for it. They generate the revenues from advertising, right? And to get more advertising revenue, they have to spread fear, negativity, bad messages, bad news. That's all they focus on every day, right? Be it the print newspaper or be it the TV or social media. That's basically how they generate money. It's all about incentives, right? So in Georgia compounding, there's an entire chapter on incentives, and incentives drive everything in the world, right? So it's nothing different with these different media organizations. Be very, very careful, and be very self-aware of what they're trying to do to you. There's a great documentary on Netflix called The Social Dilemma, which I highly recommend to all of you. Make it a point to see that documentary ASAP and save your life. It's called The Social Dilemma. Watch that documentary. It'll actually explain to you the entire dynamics of the games these social media companies are playing with us. It's also, and it's again, we all of us crave so much for external validation that these media companies have understood that okay, this is what all these consumers and humans are basically trying to outdo each other in this, and they have basically become rats in a rat race. They're trying to just outrun each other, and they're catering to our primal instincts by just showing us what we want to see.
Right. Thank you so much, Gautam. This is just emphasizing on what Dhanuka sir also tells us, that first invest in yourself. The more knowledge you gain, the better you'll become as a human being, and the process shall start, for you. So I think we should just trust the process, like you said. Thank you so much.
It's all about the process. It's all about the journey.
Thank you so much, Shalini. Yes. Gautam, you had the privilege of attending the Berkshire Hathaway AGM. Could you share a few takeaways from that AGM this year?
Biggest takeaway was that Charlie Munger was badly missed. Obviously, that level of energy and enthusiasm was clearly missing. And in fact, Buffett also mistakenly, spontaneously just spoke, turned to his left and said Charlie, because he's used to Charlie complete his, his words. But yeah, we all missed Charlie a lot. That was one thing. And second big takeaway was Warren Buffett is now clearly calibrating and orienting all the shareholders mentally for his succession plans. So Greg Abel took the stage this year with him, and it's Warren Buffett also publicly announced for the first time that Greg Abel will be in charge of the capital allocation decisions at Berkshire Hathaway after Buffett. And I think as far as the investment portfolio is concerned, that will probably be handled by Todd Combs and Ted Weschler after Buffett is no longer there. But as always, it's a delight. I think most of us value investors, we actually travel from all across the world to Omaha, not actually for just the meeting. It's actually for coming in touch with such like-minded people from around the world, because see, our investing circle is very limited, right? So our thought process, and the kind of values that we cherish, they are very unique to us. And I think what Berkshire does is it provides you a single venue, a single location where 30 to 40,000 people who have a similar mindset as yours come to the same place. And it's like you feel basically investing nirvana. You feel such a sense of delight when you see so many people around you of a similar thinking mindset.
Yes, nirvana is the exact word for this, because we had this opportunity of attending the AGM in 2019 when 29 of us went there and we attended the AGM. So I can really connect when you say the word nirvana. So as we are proceeding towards the end of the session, Gautam, let us take one or two more questions. So Arpita, can we have you?
Hi, Gautam. In your book, you have mentioned that paradoxically, as we read more books, our pile of unread books only get larger and not smaller. Definitely something that resonates with all of us. And despite the ever increasing pile of unread books, the hunger that we have and the curiosity that is growing within us, we would like some recommendations from you on books, not just on finance, but on other books in different areas of philosophy, history, whatever it may be, that has had a very wide reaching impact in your life.
I'll share 3 investing books and 3 non-investing books with all of you. I think as far as investing books are concerned, I would highly recommend Investing for Growth by Terry Smith. That book taught me how to invest in high quality businesses for the long term. The second book I would recommend is Capital Returns. It's a book edited by Edward Chancellor. And that book taught me how to invest in cyclical and commodity businesses for short-term tactical alpha generation. And the third book I would recommend is a book by Joel Greenblatt. It's called You Can Be a Stock Market Genius. Ignore the eccentric title. That book is an epic book on investing in special situations. So that book will also greatly expand your investing repertoire. Now, as far as non-investing books are concerned, obviously Poor Charlie's Almanac is a must read. It's a must recommendation by everyone. So I'm no exception. I think every year, if you reread that book once, you'll get some new insights out of it. The second book I would greatly recommend is a book by Peter Bevelin called Seeking Wisdom, one of the best books on multidisciplinary thinking. The third book is a book by the same author. It's called All I Want to Know is Where I'm Going to Die, so that I will never go there. So this is the best book on the topic of inversion, or basically what to avoid in life. And there's one extra bonus recommendation. It's a book by Michael Mauboussin. Yeah, there's a good book.
Please
It's
mute
called
yourself.
More Than You Know by Michael Mauboussin. So I would recommend that book as well.
Gautam, what is the name of
Can
the
you,
fourth book?
the last book, yeah.
Yeah, the fourth book.
Called More Than You Know by Michael Mauboussin. The
Thank you so much, Gautam. Thank you. I think our pile is only going to get bigger.
enjoy the learning process.
Thank you, Arpita. Can we have Avina?
Hi, Gautam. You have explained everything so nicely. Still, I just want to ask one question. Munger accredited success to long attention span. And you have said thinking is the hardest work there, which people mostly don't do. So, Gautam, how do you do this? If you could just elaborate, we could follow you.
I think we don't have to follow me. We can just follow what Buffett is doing. So, many of us, in fact, most of us, we just try to take decisions every single day. But look at what Buffett does. He just reads and reads for the entire year and then takes one single decision in the entire year and he makes that decision count for decades. So, it's not about the number of decisions that you're taking. It's about the quality of the decisions that you're taking. And in the investing field, it's not the answers. It's the questions that you ask that will make you a much better investor. So you can only ask the right questions when you're thinking deeply. And for that, you need to focus. And I think one of the best ways to focus is, again, like I mentioned many tools already, curate your circles in various aspects, switch off your mobile phone, get off social media. These are some of the easiest way to basically go for the digital detox. In fact, I think there's a very good book called Digital Minimalism. I think that's a great book which you guys should read. It's called Digital Minimalism. And it'll explain to you how to get off this social media circus which is going on out there. So just focus on just concentrating, because just sitting in one place and concentrating for many hours at end, that has become a luxury in today's time when everyone is just living a life of chaos. I think serenity, calmness, rationality, objectivity, and just deep work, just focusing intently on a given subject, that is what will get you to the finish line.
Oh, wonderfully explained. Thank you, Gautam. And even Dhanuka sir, he tells us about the digital detox. So we are already doing this, but wonderfully explains. Thank you, Gautam.
Thank you so much, Avina. Can we have one last question from Prachi, please? Prachi Saraugi.
Hi, Gautam. Sir, you've spoken about Gita, and I have a question related to that. So Gita talks about the 3 natures of action. And Dhanuka sir and you are, best examples of selfless investors. So my question is, how has this selflessness, Vasna, helped you as an investor? And how can we incorporate this nature in our journey from being learners to investors?
Selflessness is the best thing you can do, not only as an investor, but in every walk of life, honestly speaking.
Correct.
Because I'll give you an example. I'll give you a personal example. I was talking about this very topic with a friend earlier today that, I've started my India hedge fund in the US just 1.5 years ago. And when I was in my job previously in various organizations, in Citibank, Deutsche Bank, Summit Global, during those 10, 12 years, all those people basically whom I used to help selflessly that time out for and expecting nothing in return, in hindsight, that time I did not know that, 10 years down the line, I would be starting my own business and doing something. But now many of them are basically giving the referrals, referring me new clients and new customers for my business. And see, karma, and like George the Compounding have written this, that karma is like a big snowball. So, what goes around comes around. If you're selfless and if you help others unconditionally without expecting anything in return, the universe will start working in such a way so as to come back and reward you back multiple times over. And this has happened so many times with me in my life. And I self-published the Jaws of Compounding, the first edition. I actually sold it for zero royalty. The only intention that time was to help others and give back to the investing community from whom I've learned so much, and to probably get in touch with a few like-minded people. But after that, because the self-published edition sold so well, Columbia Business School Publishing, they actually offered me a publishing contract with them, and then the rest is history. To the joys of compounding, with the help of Columbia's global distribution muscle and marketing might, has become an international bestseller in 8 countries. And all of this, in all this success, the genesis lies in that initial days when I actually self-published the book and sold it for zero earnings, basically, even after spending so much money from my pocket. So this virtue of selflessness, and and also having a sense of gratitude every single day, is very, very good quality to have for everyone.
Thank you, sir.
Thank you, Prachi. Bhavna, a quick one, please.
Hi, yeah. Hi, Gautam. I don't have a question for you. It's just that, I'm so proud to see you here, my younger sibling, to see you here in this forum. As they say, ghar ki murgi, dal barabar. Actually, I didn't, realize how popular your book was and how much we have taken, absorbed by reading this book over here, this thing. So congratulations to you. God bless you. I'm here, right, sitting in your apartment while watching this.
Thank you so much, Bhavna. Now, I would request our member from Delhi, Vinti, to come forward to give the vote of thanks.
Thank you, Preeti. Gautam, this was a very engaging session. In fact, I had one question before I give my vote of thanks. I read in your book that you talk about reading old newspapers, and I was wondering what value do you get out of reading old newspapers, and how old does that get?
I'll share a very interesting piece of trivia with all of you right now. Do you all of you know that in Warren Buffett's office, he actually has newspaper clippings from 1940s and 1950s and 1960s, 50 to 70 years ago, hung on his office walls? It's because he is focusing on human nature, the one thing which does not change. He's not getting absorbed or engulfed by the daily news flow. He's actually focusing on how humans behaved 50, 60 years ago, and how the human beings are behaving the same way today as well. That is the value of reading old newspapers, basically, in my view. I'd never read today's newspaper, because when you're reading any piece of information, you have to look at how durable, how long-lasting is the shelf life of this information going to be. So there's something called short-term knowledge, and there's something called lasting knowledge. So if you come across some information which is going to be long-lasting in nature, that is what you have to pay attention to. And it's something which is fleeting knowledge, which is just going to pass away in the next, which we will not bother about after a month or two, then that you can easily ignore. So that's the value of reading old newspapers and timeless content. So read all the classics. Across different fields, if you read all the classics, a classic book by definition is one which has endured the test of time. It is enjoying longevity, and therefore its content is timeless. So focus on things that have endured over time.
Okay, thank you so much. And I would also like to thank you on behalf of everybody in Millennium Mams for this very enlightening session on investing. And I would also take this opportunity to thank our mentors, Mr. Vishnu Dhanuka and Mr. Sanjay Bhavania, for providing us with these invaluable learning opportunities from time to time. Thank you, sir. We really enjoy these sessions a lot. And last but not the least, a very cheery applause for the overwhelming and enthusiastic participation from all our members over here. Thank you, Mr. Gautam, for being here for us. Thank you.
Thank you so much. This was a pleasure. Thank you.
Thank you, Gautam. Thank you so much.